Hey guys, and welcome to today's video. So in today's video, we're going to be discussing how to be profitable trading the ICT concept. So if you are serious about being consistent and profitable going forward into the new year, this is a very simple process every serious ICT trader should know. So without further ado, and let's get right into it. So how can you achieve profitability using this particular process? So the first step you want to understand is you want to understand the underlying narrative of price. And when we talk about that, we're simply referring to understand the bias on where and how smart money is moving or delivering price in the grand scheme of things. So that would be, in my own opinion, the most simplest way to arrive at that, in my own opinion, would be to carry out a top-down analysis. And I've spoken a lot about top-down analysis in this particular channel. But in today's video, I'm going to be showing you how I conduct it using examples. So the next step you want to pay attention to in this particular process is you want to focus on catching weekly or daily expansions. Now, looking at it graphically, let's assume that this particular candle you can see right here is a bullish candle for a weekly or a daily perspective. Let's say you are aspiring to be profitable. All you need is you want to get in somewhere around the open price and get out somewhere around the closing price. You may not get the opening price to the T, you may not get the closing price to the T, but you want to be able to capitalize on this daily or weekly range expansion. Same can be said also for the sell perspective. You want to get in somewhere around the open price and get out before price actually closes, but you want to capitalize on this particular range right here. So now some of you may be wondering, how can I be able to achieve this particular process you just explained? All you need is to focus on catching second phase or second stage expansion. I know probably a lot of you are already worried and wondering what I mean. Let's look at the trading view charts to explain what I've just said. So right here on the trading view chart is a very graphical depiction of what I mean by second stage or second phase expansion. So let's say price started, we had a series of consolidation right here, and price rallied and gave us this whole expansion to the buy side right here, creating an institutional market structure shift right here. So all you want to do is outline that particular area in price. So you are not looking to catch this particular first stage expansion, because this first stage expansion is giving you the direction that price is going to take after you've already identified your underlying narrative of price. All you're waiting for is for price to retrace so you can engage price in the second phase or second stage expansion. So without further ado, let's just bring the charts closer and see what I'm trying to explain right here. So some of you have watched the recent video I uploaded here on this channel about how I took my final trades for the year. So I'm just going to be using that particular example to explain to you how I was able to arrive at that particular trade using this particular simple process. So we're going to be going over a top-down analysis, and we're going to be applying the second stage of expansion to be able to capitalize on that. So I'm going to be clearing the chart I'm using the replay tool right here. So this is that week we actually cut. So I'm going to clear up to that region right there. So let's say we start our charts up and we are looking at price this way. Good. So this week just closed around this region right here. So what you want to do is you want to outline the liquidity to the buy side and the liquidity to the sell side. So for us right here on the weekly chart where we actually start the analysis, is we can see right here that we have another block right here. So we're going to outline this particular order block, which is going to be the liquidity to the sell side right there, because the current market price is this particular level right here. So we're going to outline all those particular area in time. So let's mark this all out right here. So right here also is an equal low, which is going to be also a rejection block if price is to trade down to that particular level. Then also we have a mean threshold right here for the weekly order block right there. So why from the current market price to the buy side we have these equal highs right here. So we want to see price run to that area right there, and also from this area in price to this high right here, the main threshold of this week is the consequence encroachment. So that also plays significant role in price if price to trade to that particular region also. So looking at the underlying narrative of price, we've already identified our top down analysis, and relative to the current market price. So we want to see how price is going to react to one area or the other, but also looking at what price has been doing so far. We can see that we have impulse candles on the bullish side, which you can see this green candle is bigger than these black candles. Also, you can see why price retrace. It didn't take out this momentum of this green candle, indicating that we're going to see more momentum push to the buy side. So this is another part of the analysis. You want to also pay attention to what price has been doing before we got to where we are. Good. But now we've already conducted top line analysis, outlining our PDRA levels in price. Good. So based on what price have been doing before, we will be anticipating more to see price go to the buy side. Good. So now we drop down to the daily time frame. So for those of you wondering why I start on the weekly, the weekly is actually the time frame I actually start the analysis on. But sometimes if we're about to enter a new month or we're about to end a month, I actually start looking at the monthly time frame to see PDRA levels also. But majority of the time I actually start the analysis from the weekly time frame. So you drop down to the daily time frame, you conduct the same analysis. Right there you can see right here on the sell side, relative to the current market price, we have a daily fair value gap right there. And also if you look all the way to the buy side, we have these equal highs right there in terms of the body right there. Good. So these are significant areas in price that we want to see price react to once the new week starts printing out. And for some of you wondering, this is just an indicator of the previous week that just closed. So the moment we start the new week, this particular indicator is going to shift into the new week, and we're going to be needing that to also help us picture the expansion coming forward into that new week. Good. So let's just zoom in properly and get things properly. So I'll just take a moment to outline every single PDRA I've marked out, so that while price is printing, you're going to be able to see the PDRA levels by name that price is actually reaching for. So right here we have named the various PDRAs already outlined in price. So right now we're going to be using the replay tool to be able to engage price. So since we've done this, we've already concluded the first phase of this particular process, the first step of this particular process. So now the next step of this particular process is to aim for the next week expansion. I don't get in a while, aiming for the next week expansion. So that's what we're going to be doing right now. And the way we're going to be aiming for that is to engage price, looking for that second phase expansion. Good. So let's drop down to the 4 hours right there in price. Let's drop down to the 4 hours to help us engage price better. Good. So let's start using the replay tool. Good. So we can see the way price dropped lower into the new week. So the week started here. Price, this is Sunday's candle. So price dropped into the weekly order block open and started expanding higher. You can also see right here on the 4 hours how price returned into this particular fair value gap right here. So if you're catching daily expansion, this would have been an entry for you, but we're focused on catching in this particular video the weekly expansion. So let's wait for the first stage. So now what we're waiting for is that first stage or first phase expansion. Good. Boom, and there we have it. So right now we can see the first phase expansion has happened, and we can see price is retracing right here. So all we want to see is price retrace to a discount PDRA within this particular first stage expansion. Good. So we can see that price is coming from a base point right here. So there's a narrative in price. We have been bullish and we have seen price respect discount PDRA and started pushing, forming this particular first phase expansion right here. So all we are waiting for now is for price to retrace within this first phase expansion and give us a signal for entry, either a market structure shift, a fair value gap, or liquidity run, whatever it is, for us to engage price in the second phase expansion. So right here I can see that we have an institutional market swing point right here from this particular low to this particular high right here. So I'm going to outline that in time. I'm going to outline that particular area in time right there. And also I can see that we have other blocks. These are other blocks right here. Good. These are other blocks. And if I zoom in properly also, I think we should be able to see fair value gap right there. Should be able to see fair value gap right there. Good. So I think I can see a fair value gap. So I'm going to mark that out. That's from this particular high to this particular low right there. So let me just change the color to point that out better. Let me use orange. Okay, let me use blue instead. So I believe we should be able to spot that why price is printing. So we have a fair value gap, we have a swing high right here, institutional swing point. So for those of you wondering what I mean, you can watch the video of institutional swing points I just posted recently also on on this particular channel. So price could actually come for this particular low right here, but I'm not actually expecting that because the institutional swing points should be strong enough to hold price, not to break lower, especially when we are our bias is now bullish. Good. Now with this particular indicator, which represents the weekly candle, mind you, we're on the 4 hour time frame, so this particular candle represents the weekly candle. This is a power of 3 candle indicator that I think it was created by a guy called the 2 degree. So you can actually find it here on TradingView. So you can see that this particular candle has actually expanded already. It expanded all the while to this particular region. So as we start having a retracement, you can see a decline in momentum on this particular weekly candle. So let's keep playing price and see if price is going to reach for this particular zone so that we can engage price. So you can also see that price tried to reach lower right here but failed, give us a weak rejection and pushed all the way to the buy side. Now you can see that price has tanked into that particular order block and price has rejected. Good. And now also you can see the consequence encroachment right there. So you can see price ran through that consequence encroachment. So really didn't respect the consequence encroachment. But while coming down, because of we had a fair value gap, you can still see the reaction in price around that zone. So I'm going to clear out this consequence encroachment right now to just keep the chart clear. Good. So let's just play price and see what happens. Boom. So you can see the way price drop into this particular fair value gap right here and gave us a quick reaction. So I think the replay tool went so fast, so I'm going to clear price just for the benefits of this particular example. Let's zoom in again to see things clearly. So you can see right here that price has reached into the discount arena right here, into this particular fair value gap. Also the high of this our institutional swing point right there was actually tapped, and the moment price tapped into that particular zone, it failed to get into this other block. But the moment price tapped into this zone, which is this institutional swing point and fair value gap, you can see the reaction in price on the 4 hours. Good. So this reaction in price is not valid because there is no significant area that price dropped into. So that significant area was probably on the 1 hour or on the 15 minutes. But right here on the 4 hours, you can see that significant area that price dropped to, which is this fair value gap and an institutional swing point. So the institutional swing point is very, very powerful in especially when catching second phase or second stage expansion. So that's why I like including it in my setup. So also include it in your own process. Good. So right now, so once this has happened on the 4 hours, all we're going to do is to drop down to the 15 minutes to see the reactions in price. Good. Let's drop to the 15 minutes right now. So right here, we are on the 15 minutes. Good. We are on the 15 minutes. But the moment price drop into this particular area, it ran this particular low. So we have a run on liquidity, giving us more validation that there's an interest around that zone. And the moment price ran that liquidity, you can see the reversal to the buy side. Good. So all we're waiting for is for price to come into one of our time zone, either the London Q zone or the New York Q zone, for us to be able to take a trade. So at this time, this particular chart is set to the New York chart time. So at the time price is dropping, this is around 14, so that's 16 o'clock, which is going to be 4 o'clock New York time. So that's already market closing hours. So we're going to wait for price to trade into the London session to be able to capitalize on that time liquidity to see price go to the buy side. So this is how you're going to take the process going forward. So let's just outline that in time. So I believe that'll be 2 o'clock New York time. Let's look at that. That'll be 2 o'clock. So okay, around here, that's 2 o'clock New York time. So let me just zoom in the charts. So that's 2 o'clock New York time. So right there, so 2 o'clock to 5 o'clock New York time is the London session Q zone right there. So let's see how price plays around. Let's see if we keep going lower or price respects that low and comes into the London session. So mind you, I want you to also see that we've also broken structure right here. So that confirms, okay, we want to see price keep going higher. But the reason why we're not engaging price is because we want to have our entry within a time zone, because that's when we're going to have a lot of volume coming in our favor. Good. So that's why we're actually waiting for the Q zone. And again, you can see how if you had entered here, your order and price will keep revolving around your order. so it will not actually just expand. And one thing you don't want is to enter a trade and you're waiting for so long to start seeing profit on that particular trade. So you want to be patient. Good. So let's wait for the time zone. So now we've entered the time zone right here. So we enter the time zone on this particular candle right here. And looking at the time zone, we've not cleared any form of liquidity. Neither have we stepped into any form of fair value gap as we entered into the zone. But we've had a reaction in price like a W pattern, which is a market structure shifts to the buy side. Good. So I would not want to enter this particular trade. Why? Because looking at price right now, I can see series of liquidity right here. There is a low right here to the sell side. There is a low right there. There is also another low right here. So price could actually come for this particular low right here and before seeing price go up. But if I did not have enough time on my hands and I saw something like this market structure shift, I'll probably have my entry here and put my stops below that low. So that's if I don't have enough time on my hands to sit and see if price was going to come for these lower prices. But for the sake of precision, let's see if price is going to get to that particular low. So we saw price right there gets to this particular low, even busting through this particular low right here. So price dropped into this particular low, and not just that price dropped into that particular low, we can see the rejection in price right there. And after that rejection, we saw impulse drive to the buy side. Good. Now this candle stepped into a fair value gap but did not reject. It built another momentum candle right there, even creating another new fair value gap on this particular dealing range right here. So for more precision, we can still wait to see if price is going to come into that fair value gap, or we can enter right away. So most of the times I just recommend, once you see your first confirmation within this zone, just enter. Like if I was if I knew nothing about this liquidity of refining precision, I would have just entered around this zone right here. But since I already knew that price was going to come to this low, I'll be waiting for that drop in liquidity. You get what I'm trying to say? But all the same, let's just follow it for the sake of precision. So let's play one more time and see. So we can see how price dropped into this particular fair value gap and gave us a good reaction in price, just even leaving or stepping out of the session right there. So let's take our long position. So we enter our long around that zone. So where we put our stops, so you can put your stops below this low, seeing that price has cleared all the liquidity right here. But for me, as the way I like to trade it, for more protective stops, I like putting it below the ultimate low right here. Good, to give me more buffer in terms of if price wants to come and clear this particular low before running higher. So I'm going to zoom price down. So what will be our area of targets for this particular second phase expansion? So if you look to the buy side, we can see there are a series of equal highs, and there's also this equal daily high body right here, which is this right particular line right there. Good. So we can extend our price to this particular equal highs right here, or we can actually aim for this particular one right here. So either ones could be a potential area of target. So let's just aim for this near term equal high. So based on risk to reward, this is going to be probably a 1 to 2 risk to reward, a 1 to 2.6 risk to reward on this particular trade. So let's see how the trade actually plays out. So mind you, this is the second phase expansion. Let's see how it plays out. Good. Boom. So you can even see that price came, and long before price ran the equal high, which was on the which was this particular equal high, you can see the way price hesitated a little, came down into this fair value gap and bust through all the way into this particular daily equal high. And you can see this candle, which represents the weekly candle currently printing. You can see the momentum of the candle. So you can see how price came down all the way, almost getting back to the open price. So we entered back around that region. So we missed out on this whole first expansion, and all we capitalized on was on this particular second expansion. So this is the particular simple process you can actually use to profit using the ICT concept on a consistent level, on a day-to-day, week-to-week basis. So you want to focus on catching weekly or daily expansion. So I believe I went over a lot of things in this particular video. So if you have a question or your thoughts, you can leave it in the comment section. I believe you found value in today's video. If you do, hit the like button, hit the subscribe button, and see you in more videos.